Hi there. Welcome to Trading Day. I'm Lindsay Biscaya. Let's get to some of the stories we're following for you in the BNN Bloomberg newsroom. Nicolas Maduro has pleaded not guilty to U.S. charges in a narco-terrorism case against him. Earlier today, Maduro was escorted in front of a federal judge in Lower Manhattan to face the charges against him. This kicks off a legal battle that could take months or longer before he faces trial. And Crestpoint Real Estate Investments has agreed to take Ottawa-based landlord Minto Apartment Real Estate Investment Trust private. The deal values the firm at over $2 billion Canadian. Crestpoint will buy majority control of the apartment REIT at 18 Canadian dollars per unit. And U.S. oil stocks are trading higher today after U.S. President Donald Trump pledged to revive Venezuela's energy sector. Chevron, ExxonMobil, and ConocoPhillips are surging on expectations of expanded access to Venezuela's vast oil reserves. Trump said U.S. companies will invest billions to rebuild the country's crumbling infrastructure. And we'll take a look at the TSX this afternoon, trading higher today, up more than a percentage point. Of course, we're seeing gold and silver rallying. That's helping to boost the TSX up today. If we take a look at markets south of the border in the U.S., trading higher as well. The S&P 500 up by 0.8%, the Dow Jones up 1.6%, and the Nasdaq up 0.7%. Tech stocks doing pretty well today, too, helping to bump these markets up. Healthcare spending has jumped in Newfoundland and Labrador, which has the finance ministers concerned over the growing deficit. CTV's Garrett Berry filed this report.
Newfoundland and Labrador is set to run a deficit of nearly $1 billion this year. Numbers released in this week's budget update paint a picture the finance minister admits is deeply troubling. But the recently elected government says it is still committed to some election promises, like a big tax cut.
We are only beginning now our long-term planning for our first budget in 2026. Everything else will be looked at, but we are focused on our three priorities.
And while the province's deficit has become one of the biggest in the country per person, there's plenty of company in the red. Every province is expecting to run a deficit for the first time since 2010. Analysts say the trade war with the United States has only hurt.
Very severe tariffs on that if we have to.
But other long-term pressures lurk just around the corner, like a rapidly aging population, which needs more healthcare and social services. That was a factor in Newfoundland and Labrador, where healthcare spending unexpectedly jumped an extra $430 million this year. Alex Lauren of the CD Howe think tank says don't expect Ottawa to come into the rescue, not when Prime Minister Mark Carney has his own deficit concerns and has committed billions more to defense spending.
Maybe the opposite will happen. The pressure will likely be federal government will need to find solution to, limit its exposure to the provincial problems.
He doesn't believe the balanced budget is gone forever, but it will take a renewed focus on growing the economy and long-term problem solving before they come back in style across the country. Garrett Berry, CTV News, St. John's.
Okay, now let's turn to the latest in the markets as we continue to digest the news coming out of New York today. We are joined by Jay Hatfield. He is founder, CEO, and portfolio manager of Infrastructure Capital Advisors. Good to have you on such a busy day. Thanks for joining us.
Happy New Year, Lindsay. Thanks for having me on.
Happy New Year to you as well. So we are taking a look at the markets this morning, the North American markets. Just to start off before we dive into specifics, what do you think is kind of driving the markets this morning?
Well, it shouldn't be misinterpreted. It's not necessarily this U.S. stock market's pro-colonialism, but the announcement in Venezuela is benefiting some, super large cap companies like ExxonMobil and Chevron. And I think there's also some relief that this conflict was resolved, or at least the initial part of it, very quickly and without any casualties or deaths, I guess. So a little bit of a relief rally. And then more importantly, though, we're extremely bullish about the market. We have an 8,000 target And we do think a big part of the rally is going to occur in the first quarter when we're expecting to get great inflation data. So it makes sense that we're starting the new year off with a bang with two big rallies in 2 days.
What about the potential for rate cuts? Of course, 3 rate cuts closer to the beginning of the year was kind of priced into the markets at the end of 2025, potentially not seeing those rate cuts as early as some people might have thought. Do you think that's going to affect things as we head into the week?
Well, we do. We have an 8,000 target, which is a 23 multiple. So it's really critical we get at least 3 rate cuts. And we're optimistic about that, not because of political reasons, so not because Chairman Powell is going to be replaced, but really if you look, and we have a forecast, it's on our website, the PCE core is going to roll down hard in the first quarter. So in other words, we're anniversarying 2 gigantic prints, and shelter inflation is coming down to market rates finally after 2 years of lags. So we're forecasting PCE core gets to 2.4 at the end of the first quarter and rolls down to 2 at the end of this year. So that's why we're bullish about rate cuts. But I would take your point that it's absolutely critical to support an 8,000 target.
Is it critical that rate cuts happen at a certain time this year, or just that they happen throughout 2026?
I think as long as they're on track, what a lot of people fail to recognize is the 10-year tracks almost exactly 105 basis points over the expected terminal Fed funds rate. So in other words, as long as people expect it to get down somewhere between 2 3/4 and 3, the 10-year will stay right around 4. That'll support the housing market, should get construction back on track, because we do have a recession in those old economy sectors in the U.S., housing and construction. So that's dangerous. We need to keep the 10-year somewhere near 4 and the 30-year mortgage closer to 6 than 7%.
What about tariffs? Obviously, they're not new at this point. A lot of them were brought in last year by the White House. But I mean, will the U.S. economy, at least, or maybe North American economy, really start to feel the effects of tariffs as we head into 2026? Maybe something we didn't see as much in 2025 in terms of the impact?
Well, we draw a distinction between tariffs that are like sales taxes, so 10 to 15%, 10 to 20%, and trade wars. So we had a trade war going on with China that attenuated some, trade war noise between Canada and U.S. that's attenuated. So we actually think it's bullish for economic growth to have tariffs because you have more savings and investment. And it's savings and investment that drives economic growth. So now that all of the angst is behind us on tariffs, we think it'll be a mild positive for the economy because the budget deficit's likely to drop from 1.8 trillion to 1.45 trillion is our estimate, assuming there's no big tax cut, which there might be. Mm-hmm. But if there isn't, then you'll get a much lower deficit, which should also help rates and help economic growth because there's more money to be invested in productive assets.
Okay, so with all of that in mind, with investors who are maybe kind of looking to freshen up their portfolio this year, do things a little bit differently as we head into 2026, do you have any recommendations in terms of where you think they should be looking?
Well, I guess the first point is that we do think it's going to be more balanced rally. So dividend stocks and non-tech stocks make sense. So like our largest dividend fund is ICAP. So we look at the holdings there. We do love financials. They're doing really well today, but for the whole year. So regional banks, which we weren't recommending last year, we were recommending investment banks, but also private equity firms. We think they were unfairly punished. So we would be out on the risk curve on the dividend stock side and not just be in tech stocks, but we do like also Marvell and Amazon. Both of those companies have lagged and trade at quite reasonable multiples. So look at valuation on the tech side. We do think that, though, it's a good time to look for dividend opportunities, particularly in financials.
Yeah, when we're speaking about tech, I mean, what do you expect to happen this year with that amazing tech run we saw in 2025? Do you think that's going to moderate out a little bit, or where do you think we're going to go with tech and some of the big stocks this year?
We do think valuation matters. So we have GARP valuation models for the what we call the Mag 8, so that includes Broadcom. And those were signaling full valuation when we hit 7,000 last year. Now there's only about 5% upside. So that's why we think that tech stocks will actually underperform their risk. So in other words, let's say we're right and the S&P's at 15, NASDAQ's at 15, the Dow's at 15. Well, that actually means NASDAQ underperform. So we would look for reasonable valuations, not just chase the momentum stocks like Palantir that traded at a PEG ratio of 7. So look for more modest valuations, what you mentioned, Amazon, Marvell, so you got reasonable PEG ratios, because it's clear that as long as the market stays rational, which it usually does, that a lot of these tech ideas are tired because they're fully valued.
Okay, that is all the time we have. We'll have to leave it there, but I appreciate you coming on and sharing some of your insight. Thanks so much.
Great, thank you.
That was Jay Hatfield, founder and CEO and portfolio manager at Infrastructure Capital Advisors. Coming up, we are looking at global trade changes ahead of the Kuzma Review with Drew Fagan, professor at the University of Toronto. That conversation is coming up after the break. Kuzma is up for review this year, but with the latest American action in Venezuela, the impact on the global oil markets could shift the Canadian position. So here to talk about that ahead of the Kuzma Review is Drew Fagan, professor at the Munk School of Global Affairs and Public Policy at the University of Toronto. Professor, good to have you. Thanks for joining us.
Thanks, Lindsay.
So given what's happening, I mean, correct me if I'm wrong, oil is probably going to be a bit of a negotiating tool for Canada in this review that's coming up. How does what's happened in Venezuela and what happened today in New York change things for Canada in the review?
Well, the Kuzma Review, we've really been in a negotiation with the United States and the Trump administration, as you know, since the spring when he imposed tariffs, limited in our case, on Canadian exports to the United States. You know, oil in particular has been a fundamental aspect of the bilateral relationship. It was really oil that was what the United States wanted in the bilateral free trade agreement in 1989. We guaranteed them access to Canadian oil after the nationalistic policies of the early 1980s. That's still fundamental, along with rare earth minerals and others that we have access to. But the geopolitical market in oil, after what happened on the weekend, is so unclear, geopolitics impacting markets and the economy so much more than it did 20, 25 years ago, that it's hard to foresee. The talks between Canada and the United States have been in abeyance for some months. They will come back to the fore by the spring. The deadline to really get started on the review is July, but they're already talking, and we'll see where it goes. But to your fundamental question, yeah, oil is a big part of this.
Oil, a big part of it. As you say, critical minerals, another big part of it. And what we've been watching over the last year or so is the U.S. government sometimes, or U.S. companies taking out stakes in Canadian mining companies. So it seems as though there is some interest there when it comes to critical minerals. Is there any other big players, I guess, like you could say, that Canada could use in these negotiations? I take your point that they've been happening for a while, but when they officially start later this year?
Yeah, so you have to look at this in terms of both the politics and the economics. The economics of the bilateral relationship is pretty fundamental. And it's pretty clear that both countries benefit from a deeper relationship. You know, no country has a strategic interest in another country like Canada does in the United States. Obviously, the size of that market, but it matters to the United States too, particularly with regard to resources. So that's going to come to the fore, and we're going to see, you know, where the administration is on all of this. Nobody really at this stage expects an early deal. On the other hand, if you think about everything that the Trump administration is doing globally, especially after last weekend, do they really want to pick a fight with Canada? The Carney government government was very careful on the weekend in how it responded. We probably should be happy that we're not on the Security Council right now and having to choose a path like Britain always has to as a permanent member. So Mark Carney is trying to act very carefully in the circumstance and not get pulled into the huge debate that's going on globally and the accusations towards the Trump administration about their actions on the weekend.
I mean, that's a perfect segue into what I was going to ask you, right, is how difficult it's going to be for Canada to kind of toe the line over the next couple of months, particularly when you're dealing with a president with such thin skin, right? Like something that Mark Carney says or something that Canada says that's against U.S. actions might go against them in these negotiations. Like, how difficult is that going to be to kind of walk this line?
It's virtually impossible because it's very difficult to strategize in a circumstance where the other government, first of all the actions they're taking globally, the United States is always thinking globally. We've managed over time to manage the bilateral relationship pretty well, but not with a president like this, who sort of shoots from the cuff and acts the way he does. So that's probably going to continue. Now, by the spring, by the summer, I think the administration, particularly the president himself, will be thinking more seriously about his polling numbers, which right now are very weak. And if he hasn't seen a recovery in that, it's possible that he'll sue for peace on a bunch of the files that he's been fighting, including this one. It's possible, but it's unfortunate, and it's the nature of Canada that so much of our future, so much of our interest is decided by what are really domestic U.S. interests, including politics and to some extent the private sector and corporations themselves, almost all of which have been supportive of CUSMA. And while being careful about what they say in the consultations with Congress, underlining the fact that the actions taken over the last year were not in U.S. economic interest.
Mm-hmm. It's going to be interesting to see what happens. As you say, that approval rating for Donald Trump is, I think, at 30% now, so it's going lower. There was talk from Donald Trump a couple of months ago about doing away with the free trade agreement altogether. Is that just talk, do you think? Do you think that's still a possibility coming out of these negotiations?
Anything is possible in this circumstance. Like NAFTA, CUSMA, there's a 6-month abrogation clause. This is not a treaty of Congress. It's a bilateral agreement. And he has threatened that. His officials, including his senior trade official, have talked about 2 bilateral agreements, or mused, you might say. One Canada-US, one U.S.-Mexico, which is precisely what we didn't want, some decades ago, and why we pushed hard to be part of NAFTA. We had an underlying free trade agreement, after all, at the time. So a lot is on the table, possible, but I don't think we can count out the possibility that there is less here than we fear. For one thing, I think they'd like to keep this out of controversy in the Congress, in which case it might be more of a technical review, which is certainly what the Canadian side is pushing for. And of course, we have a new ambassador in Washington coming in about a month. He'll be sort of feeling his way through this. But it's as challenging a situation in terms of bilateral relations as we've seen in a century.
So much to watch for. We'll have to leave it there. We're out of time, Professor. I appreciate you taking the time, though. Thanks so much.
My pleasure. Thanks, Lindsay.
That was Drew Fagan, professor at the Munk School of Global Affairs and Public Policy. Up next, Bob McNally, founder and president of Rapidan Energy Group, is here to continue our coverage about the impact of Nicolas Maduro's arrest and what that's had on the global oil markets. Stay with us. Welcome back. We are continuing our coverage of the U.S. actions in Venezuela. What could the arrest of Nicolas Maduro mean for the world oil markets? For more, we're going to bring in Bob McNally, founder and president of Rapidan Energy Group. It's good to have you join us, sir. Thanks so much.
Hi, Lindsay. Thanks for having me.
So we are seeing the price of oil edging up ever so slightly this afternoon after fluctuating a bit this morning. Just first of all, your reaction to what we're seeing with the price of oil. Are you surprised?
Not surprised. Really, it's a nothing burger. Venezuela really doesn't matter too much for sort of near-term oil supply. And there hasn't been really any change in the way it does matter over the weekend. So no new information, no real change. Not surprised to see this be a nothing burger. I think we've seen a bigger reaction in some of the equity prices of companies that may benefit were Venezuela to open.
Right, like Chevron, I take it, and some other companies that already operate there. What about the Canadian oil market, though? Could this mean something to Canada's oil? Obviously, we produce a lot of heavy crude, just like Venezuela. Is there maybe some competition there?
You know, I hear that buzz a little bit, but I don't think so. I think Canada is going to be absolutely fine. Yes, Canada is one of the rare producers of this heavy sulfurous crude that Venezuela also produces. So they do compete on quality, if you will. But a couple things. Canada is much bigger than Venezuela, and Canada's exports are sort of pipeline locked into the Midwest. Most of the oil sent to the United States by Canada goes to the Midwestern states, and those refineries are tuned, they're optimized to Canadian grades. Those aren't going anywhere, and we don't really import from the Gulf much into the Midwest. So that's fine. The bulk of Canada's exports are fine. Now, when Venezuela sees production increases, and that'll be mainly after the end of the President Trump's second term. This is a long and winding road. Yes, if we get to 2030 and 2032, would Canadian grades compete with Venezuelan grades in the Gulf of Mexico? Sure, there'd be a little price competition there, but that's not going to break the bank. If anything, really, I think the biggest thing for Canada and other producers is the world is sort of, in the last few months, changing its view about this peak demand narrative. Where Canada would really be in trouble is everyone still believed that oil demand was going to stop growing by 2030 and then fall. That would be bad news for Canada because it's high cost, as is U.S. shale. However, the world is moving on from that. EVs policies are not as strong. EVs are coming, but not as fast. And so I think this prospect of long-term demand being stronger is also a big uplift for Canada. We're going to need Canada, we're going to need the U.S., we're going to need Venezuela.
Interesting. So, yeah, you think that Canada should continue with its, or at least Alberta should continue with its quest as well to get more pipelines going and to produce more oil and get it shipped out.
Absolutely. Canada, the future is just getting brighter and brighter for Canada, especially after 2030, in a world in which we don't see this death of oil demand that many people believed until just a few months ago.
Is there more of a risk? I mean, when you look at some of the other countries that did rely a little more on Venezuela for oil, I take your point that it doesn't actually produce or sell a lot of it worldwide in terms of the global supply. But when you're looking at Russia, China, Iran, is there anything that you're watching for that could happen there with those countries that were taking some of Venezuelan oil?
It's a great question. So first of all, only China has been the major taker of Venezuelan oil. Okay, they took about 2/3 of what Venezuela exports. The United States gets about 1/3. Now, it's not a good day for a Chinese refiner, what we call teapots, small independent refiners that, like those Midwestern refiners, they're optimized to heavy sulfurous Venezuelan crude. They love it, and they've been getting it cheap for years, but those days are coming to an end. Bad for them. Not the end of the world for China, though. Venezuela is only about 4% of China's imports. So not bad deal for teapot companies, refiners, not the end of the world for China. But you mentioned Russia and Iran, and here is where I think the real story is. Because once folks realize that Venezuela, what's going on in Venezuela these days, while uncertain and fluid, really isn't mattering much for near-term oil supply, Iran and Russia will. And we have to ask ourselves, and I think people will ask themselves, after President Trump surprised folks by doing this, is he willing to take more risk and be more aggressive toward Iran and Russia, where big geopolitical and sanctions risks loom later this year, now that he's done this to Maduro and so forth? So that is where the real oil supply risk is and where the real risk of an oil price spike is.
What about, so I take your point that there's like people are looking to whether the U.S. would do this with other countries. But there's other countries such as China that have been looming off the shores of Taiwan for many months now. How does what we've seen with Trump's intervention in Venezuela maybe affect other geopolitical interventions around the world, like China and Taiwan?
You know, there's a common theme you hear, which this is about, well, since Trump did this with Venezuela, China has a free hand attack at Taiwan and Putin can do what he wants in Ukraine. I don't think that's how the Trump administration sees it at all. Yes, the Trump administration is now saying, under the Don Roe doctrine, if you will, we will actively oppose, we will intervene to oppose adversaries who have major financial stakes in our hemisphere. We're seeing it, and we're going to see more of it. But this does not mean the United States is pulling up stakes and getting out of Western Europe, the Middle East, and Asia. So if anything, what we're hearing from our friends, and we watch China very closely, is they are cowed by this. They are not thinking, wow, this is great. This is a green light. We can do what we want with Taiwan. Just the opposite. The military prowess the United States demonstrated here, I think, was shocking to folks. We blew through a lot of expensive air defenses and hardware that folks were hoping would do a better job. So I don't think this is going to really encourage Beijing towards adventurism. And the U.S. is not pulling out of Taiwan or the Middle East or even the Western Europe, despite, talk of this and a lot of belief in it.
So interesting. So many different things to watch really around the world. Bob McNally, founder and president of Rapidan Energy Group. Really appreciate your time. Thanks so much.
Thank you.
Coming up, we are exploring a precious metals look ahead with Wheaton Precious Metals CEO Randy Smallwood. That is coming up right after the break. Nicolas Maduro has pleaded not guilty to U.S. charges in a narco-terrorism case against him earlier today. Maduro was escorted in front of a federal judge in Lower Manhattan to face the charges against him. This kicks off a legal battle that could take months or even longer before he faces trial. Greater Vancouver Realtors has reported home sales in Metro Vancouver finished the year down 10%. That is the lowest annual sales total in over 20 years. Now, despite the low sales total, the number of listings reached a new high, eclipsing the previous record high in 2008 by a little over 1,000 listings. And shares of Minto Apartment Real Estate Investment Trust are surging as Crestpoint Real Estate Investments has agreed to take the Ottawa Trust private. The deal values the firm at more than $2 billion, with Crestpoint opting to buy majority control of the apartment REIT at 18 Canadian dollars per unit. Now, the remaining 42.7% of voting interest will be retained by the Minto Group. Taking a look at the markets today, the TSX starting the week off on a bit of a high note, up more than a full percentage point to start the week. And if we look at U.S. markets, it's a similar story there. In the U.S., we're seeing tech stocks actually helping to bump up the U.S. markets. Also, the price of oil going up today after what's happening in Venezuela and in New York. And you can see that's reflecting on the S&P 500, the Dow Jones, and the NASDAQ. Copper, meanwhile, has touched $13,000 for the first time today, along with big moves for other precious metals like gold and silver. And with recent record-breaking numbers, we're here to talk about what's ahead for the new year for precious metals with Randy Smallwood, CEO of Wheaton Precious Metals. It's good to have you join us. Thanks so much.
Lindsay, always a pleasure. Thank you. Happy New Year.
Happy New Year to you as well. Let's start with copper, because I feel like that's not getting the attention that it maybe should today. It's on a bit of a run. What do you make with what you're seeing with the price of copper as we head into the new year?
Well, there's no doubt the world is moving towards electrifying and increased mobility and mobile electronics and such. So that demand for copper is not going away. And yet it's so tough on the supply side to actually build, construct, permit, even find new copper mines. And so the supply side has always been constrained, and we've been expecting a good bump in copper prices for the last couple of years, and I think we're finally starting to see over the last couple of months some good strength in the copper space, and so it's important for us. We of course don't have any copper production in Wheaton Precious Metals, but 2/3 of our precious metals do come as non-core byproducts from copper mines. And so we're always very interested in the copper space, watch what's going on. And we've got a strong balance sheet that's ready to help build new mines in the space. We just need some new mines to get built.
Well, that's what's so interesting, right? Is there's not, as you say, there's not enough production of copper to meet the demand, and as you know, more AI data centers start getting built, and copper is needed more and more. Is there a concern that that kind of supply and demand that gap will grow even further with copper?
Well, there is, and how that gets resolved is higher prices that just make it more challenging and more costly. I mean, I think it's one of the reasons why we're starting to see a little bit more silver, a move in silver too, because silver, of course, always improves whatever copper is trying to do. When it gets mixed in, it improves performances dramatically, and so I think on that front, it's also one of the supporting factors behind silver. But there's no doubt it's so tough to permit and build new mines, so expensive that we do need stronger prices in order to get companies to commit to that big capital up front. And so we're getting close. Hopefully within the next couple of years, we're starting to see some big copper projects being committed to over the next, that'll come into production over the next 4 or 5 years.
Right. It's just a big circle. Okay, let's talk about silver a little more in depth then, because as you mentioned, silver's kind of goes through the same thing as copper. Correct me if I'm wrong, in terms of supply and demand. It's also an industrial metal. What do you make of the run silver saw in 2025, and what do you think is going to happen in 2026?
Well, I've always been probably most bullish on silver as a commodity because it also acts like a currency. It's an affordable precious metal, and so it's got two demand spectrums that are both pushing and driving it hard. And on the supply side, the other attraction to silver is that the bulk of silver is produced as a non-core byproduct, mainly from lead zinc mines. And lead zinc prices aren't doing all that well. We're not seeing any expansion or growth in that space. And so higher silver prices don't drive increased production at those lead zinc mines. And so you've got a supply constraint coming into the market when you have increased demand on the other side of the spectrum, both from increased efficiency in electronics and such, the industrial applications, which is now, I think, about 2/3 of the total demand. But then the other third is that affordable precious metal side, and we're really starting to see silver wake up on that front. So I'm really excited about silver. I think silver's got some great opportunity. It was by far the strongest metal in 2025. I think it's going to be the strongest metal again in 2026.
Okay, that was my next question, because before we get to gold, I wanted to pick up on that, right? Like silver compared to gold in 2025 had an incredible run, but it seems as though people always talk about gold a little bit more. Do you think silver is going to get the hype and awareness that it deserves this year?
Well, if you know anything about the history of our company, we started off as a silver streaming company. We're now dominant in the gold space. We have 2/3 of our revenue comes from gold. Although with the silver outperformance, silver is definitely going to grow in terms of the share of revenue. But one of the reasons we stepped into the gold space is that the silver market is so small on a relative basis to gold. Gold is global. Gold is universally recognized. It's coveted by central banks around the world and sovereign wealth funds around the world. Silver hasn't quite got to that status yet. It has in the past, and there's a good chance that it may at some time in the future become part of that that sovereign wealth status, sovereign wealth currency status. But at the same time, what we're seeing is silver always lags gold and outperforms, and that's what we're seeing right now. Is that the outperformance of silver? The retail space, the institutional side, the investor side is now coming into the space, and that combined with increasing industrial demand, the fundamentals behind silver are the strongest I've ever seen.
Okay, so let's talk about gold then, because as you mentioned, there's more opportunities in gold. We saw still a phenomenal run for gold in 2025. What factors do you think have to be in place for gold to continue to be strong in 2026?
We can't talk about gold without talking about the U.S. dollar and the deficit and the continued debt and deficit and fiscal mismanagement of balance sheets around the world, and how that plays into any type of sustainable strength in the U.S. dollar. And so to me, gold is the counterbalance to the U.S. dollar. And if you can paint me a rosy picture for the U.S. dollar, then I'd be a big concern. But we just in trying to assess where we see gold going, we just don't see anything but longer term weakness for the U.S. dollar. It's one of the ways that they can manage their fiscal imbalance is to weaken the dollar to try and minimize the costs of the existing debt burdens. And so all of it just spells the continued strength. I don't see any headwinds for gold. I just see continued strength, and it wouldn't surprise me to see gold over $5,000 by the end of this year.
Wow. Okay, that's going to be something to watch out for. Just before we wrap up in the last 30 seconds, any other metals that you think people should be paying attention to that maybe we're not talking about?
We're really focused on gold and silver. I just think that from a precious metals perspective, it is where we should be focused on, and everyone needs to have a bit more of it in their portfolios. And so at Wheaton, with the streaming business model, we are the lowest risk way to invest into the precious metal space. We do have a little bit of platinum and palladium, but our focus is really on the gold and silver side.
Okay, that is all the time we have. Appreciate you joining us today and sharing your insight. Thanks so much.
Pleasure.
That was Randy Smallwood, CEO of Wheaton Precious Metals. Coming up, we are looking at Canada's AI scene with our next guest, CEO of B3 Systems, Chris Graham. That is right after the break. Ontario's manufacturing sector attracted more than $100 million in venture capital investment last year, but data shows that momentum in manufacturing AI adoption has dropped in recent years. B3 Systems is among some of Canada's AI companies looking to reverse that drop. And here to talk about AI in Canada's manufacturing sector is Chris Graham in studio. Thanks so much for joining us. It's good to have you.
It's great to be here. Thanks for having me in person.
Yeah.
Happy New Year.
Happy New Year to you as well. So let's talk about this drop in AI manufacturing. What's kind of behind the drop, first of all, before we talk about how you're going to help fix it?
Absolutely. That's a great question. So I guess what we saw over the last year and a half, 2 years is AI sort of went mainstream. We saw a lot of companies getting excited about AI and recognizing that AI was going to be an important part of the future. So they started to do different AI-related things. And I guess what I mean by that is jumping into it and trying some POCs, or what we call proof of concepts. And I think after several months of trying to do that, they didn't start to see the value that AI was providing them. So they sort of stepped back away from that a little bit. And what we started to hear firsthand is they started to reach out to us and say, we like what AI can do for our industry, but we're starting to recognize, to get the value out of it, we should talk to some experts in the field. And that's where they started to reach out to us and ask how we could help them.
How can you help them? I mean, because I was wondering as you were talking, does it just take a while to see the benefits of using AI and maybe companies aren't patient, or is there something that you can do to actually help?
Yeah, so we live and breathe AI. We live and breathe the manufacturing industry. We actually started doing data science, meaning AI and machine learning, back in 2017. That's when we started to get excited about it. Wow. And we can help them by, you can think of B3 as an AI-first platform. And we have a set of digital coworkers that can work alongside the folks on the shop floor and the people with management. And these digital coworkers are directly plugged into the machines. They're reading data in real time, huge, vast amounts of raw data from the machines. They understand their business, what metrics are important to them, and they're monitoring these metrics. And what they're doing is they're helping identify opportunities for them to perform better as they're running shift or their production day. They're helping them achieve their targets by making recommendations. They're also making suggestions when they start to see issues that could possibly happen. And make recommendations how they can prevent issues from happening. And that include unforeseen downtime events and help them plan maintenance ahead of schedule so they don't have large unplanned downtime events, which is very costly in the manufacturing industry.
Because it can be hard, I guess, as all these companies in the world starts to integrate AI into everyday life and into businesses, it can be hard to understand exactly what it can do to help you out and how to use it in the best way.
Absolutely. Right? Yeah. So that's where we've geared our platform to be intuitive for them to be able to use it on the shop floor. And these digital coworkers, or AI agents, they're highly trained in the field of manufacturing. And that would include quality control, downtime, maintenance, analytics. And they'll be monitoring all these parameters at a pace that no human can possibly monitor all these. And they do it 24/7. They don't sleep. And they're running all the time, and they're collaborating with each other. And as they're collaborating and working for the manufacturing plant, they're making recommendations to the coworkers. They're making recommendations to the people on the shop floor, and them getting this information in real time greatly enhances their day-to-day activities.
Is that who Barry is? Who is Barry?
That's a great
is that
question.
What you're talking about?
Yes. Yeah. So Barry is.
Which is B3RRY.
That's right.
Yeah.
Yeah. So Barry, you can think of Barry as sort of the main agent. He's the main orchestrator.
Okay.
He has a team, just like manufacturing environment would have a team of managers working in different departments. He's the main orchestrator of several different AI agents that are, again, trained in those specialized roles in manufacturing. And he'll be taking this information and understanding what they're saying in terms of maintenance, downtime, QC, and other stuff like that. And discerning that information and making recommendations back to the people on the shop floor and within the manufacturing plant.
Interesting. There's so much talk, or there was in 2025, about an AI bubble and whether we're in an AI bubble. I'm not sure what you think about that. Like, do you believe we're in an AI bubble at the moment?
I would say we're in the early stages of AI. I would say that there's lots of opportunities for AI to continue to help and continue to expand. There's lots of examples that we're seeing that we're doing with our customers. On top of what I already described, our agents and Barry do with our customers are asking if we can send signals back to the machines to maybe slow them down or change or recalibrate them so they can run longer uninterrupted and perform better. So we're doing a lot of that, and we see more of that happening in the future.
Is there more, just before I let you go, we're almost done, but is there more challenges that Canada has compared to like the US, for example, in terms of supporting tech companies and helping to build AI and AI like data centers and all the infrastructure that's needed, do you think?
That is a great question. So I would say Canada has a huge amount of talent, really smart talent, great universities, and lots of great AI is happening in Canada. As an example, the Vector Institute in Canada is an institute that we've collaborated closely with over the last few years. And we've been working closely with them to help build out our models and tune our agents so they can perform to the best for manufacturers. I would say versus the US, US might be quicker to make some and try some things quicker than Canadians, but I think Canadians are taking the right approach and they'll get the best quality and value out of AI in the long term.
Okay, so much exciting stuff ahead. Appreciate you coming in. Thanks so much for joining us.
Thanks for having me.
That was Chris Graham, CEO of B3 Systems. Well, still ahead, we'll take one last look at the markets before we go, but first we're going to take a quick break. Stay with us. Welcome back. Let's take a look at the markets before we go here. We'll start with the North American markets, of course, including the TSX. Most of these markets trading up today. The TSX is up more than a full percentage point. S&P 500 up as well. Same with the NASDAQ Composite. Of course, all of these reflecting on the news coming out of Venezuela today and New York, after President Nicolas Maduro was captured and sent to the U.S. and was in trial in court this morning. And that will continue to be the story throughout the week. I'm pretty sure, but we can take a closer look at some of the other prices out there in commodities, including oil. Oh, we'll start with metals, actually. Gold and silver are trending up today, also on the back of this news from Venezuela. Copper also reaching new highs. Copper above 5%, but it's reached above $13,000, a new record high for copper. So price of gold and silver also up today as well. And if we took a look at the price of oil, it was fluctuating this morning, but now it seems to be edging higher as traders weigh in on the future of Venezuelan production and the future of oil. Let's take a closer look at the TSX now, some of the big movers today. We'll start with some of the leaders. Shopify is up on the TSX. You can see it's trading almost at 6% today. Brookfield is also up on the TSX. If we take a look at that one-year chart, it's up more than 4%, almost at 5% to kick off the week. Agnico Eagle is also up more than 4%, and Endeavour Silver also up. Of course, the price of gold and silver are just going up across the board today because of this news coming out of Venezuela. Some of the laggers, Canadian Natural Resources, CNQ is the ticker. That one has dropped more than 5% today. A lot of the energy and big oil companies in Canada are trending down today, including Enbridge as well, Cenovus Energy as well, and Athabasca Oil as well. You can take a look at Enbridge there. It's just almost at 3%. Celestica also trending down today on the TSX. Be interesting to see what happens over the next couple of days. Celestica down by almost 5%. That wraps up this edition of Trading Day. Thanks so much for watching.